You have to work to the extent that other people talk about you when you're not in the room.
Yes.
So now, treasury bill and treasury bond, there's only one difference, time. Let's assume I own land, and let's assume I need money. How far am I from the money?
Very, very far.
Yeah, we are like a year away from the money.
Yeah.
So that's called liquidity. Investing successfully is a change of the person. It's understanding exactly what is happening into my money and being in partnership with my money manager.
Good evening and welcome to the Late Night Business. My name is Ian Dennis, and tonight we have a very interesting show lined up as always, because tonight we're going to be having this particular conversation that we all speak about, but very few of us have a good understanding of it: investment. We want to debunk this particular myth within the area of investment, and the guest I have with me tonight is actually a distinguished member in this particular fraternity of investment. But before I get to introduce him, I want to remind you that we are here at the Capital Club, the place that you need to be as an entrepreneur. So when you join to be a member of the Capital Club, one of the interesting things is that you can have access to all these amenities in anywhere in the world. So if you're in Dubai, if you're in New York, once you're a member of the Capital Club, you can access the club at any particular country or any particular town that you are in. Also, a key thing that I want to remind you before we start this particular show, on the 4th of April, we're going to be having our masterclass, a physical masterclass with Michael Joseph at the Nairobi Cinema, and you can actually get your tickets right now for only 800 shillings to be a part of this, and you can be able to engage with him, and you can be able to be a part of this particular conversation. The guest that I'm about to have this conversation with tonight is none other than Mr. Donald Wangunyu, and I literally have to refer to all his titles because he has so many of them. So he's the chairman of the board of the Kenya Association of the Stockbrokers and Investment Banks. He's a board member of the Nairobi Securities Exchange. He's part of the board of the Standard Investment Bank, and also finally he's also the founder and chief executive officer of Forefront Management. So Donald, karibu sana.
Thank you very much.
I wish to be like you when I grow up. You have so many
Karibu
titles,
sana.
distinguished. You know, zile titles za kujiekea, CEO, CFO, CTO.
Thank you. Karibu.
But nice to
Let's
see
walk
you.
the journey together.
Interesting. You're looking quite smart. I like the bow tie.
Thank you very much. It's a hobby that I started some time back, where I said, you know what? It reminds you not to blend in.
To be different.
To be different. And you have to do that every day.
No, it is very important. And to find your own style.
Exactly.
Ni kama tu mimi na suspenders zangu nimezificha tu leo.
Oh, brilliant.
I don't like wearing belts. I say belts are for wrestlers.
Excellent.
The first question I like starting all conversations: what exactly are you most grateful for today?
What I am most grateful for is my family. Waking up every morning to see their faces, to take them to school, is something that I think we are tempted to take for granted. But just letting that center you and be able to give you the strength and stability for whatever it is that the world will throw at you.
Interesting.
Yes.
How would you rate in your order of rankings? Where does family fall into place? That you've mentioned it.
That is a solid number 2. God first, family second,
and then the rest.
Kadhalika.
ETC. So I want just to find out, where did this journey, or whatever your journey in investments, take off? How did you find yourself here? Because you'd mentioned to me earlier on off camera that you're a software engineer. How did a software engineer find himself in the field of investment?
So yes, as you said, my training is in software engineering, and I really don't care what I'm building with software. And so right after college, I had the opportunity to go either into gaming or financial services. And because I am a boring guy, I guess, I chose financial services.
You're not boring, you just have to press up. Money calls, you have to listen.
I don't know if a 20-year-old should be getting into financial services, given the choice. So then I was in an investment bank in the US, in the operations department. So I learned back office work. Back then we were dealing with mainframes and COBOL programming. Some people will click
for me, a Peter
Then after that, into commercial banking, and the system that I managed tracked checks through the Federal Reserve of the US. So I did that for some time, and then Kenya just started growing in financial services. And so I had a brilliant opportunity to come back home, still in investment banking,
Yeah.
in the operations department of an investment bank.
Yeah.
I mean, it was exactly right. Yes. And so that's how I got here. I immediately saw the need for SMS trading. You know, back then it was still go to your broker, and so we brought in SMS trading back in 2008. People are talking about it today.
Yeah.
For SAB, that's 15-year-old Standard Investment Bank. That's 15-year-old technology. And from there, it's been what's the next challenge and what's the next challenge right now to forefront management.
Interesting.
Yes.
Let me just take you back, because you happen to be, what's it called, part of the US financial system, and probably at that particular point in time you saw what exactly was happening at that point. I think the recession that happened there.
Yes.
Maybe just take me back in terms of your understanding of that particular period, and primarily what are some of the lessons you got from your experience in the US and the recession that happened. I think it was in 2008 too.
Yes, there were two recessions. There was the .com bust,
Yes,
and then there was the housing bubble.
Yes.
Let me bring it to an individual perspective. So during the .com crash,
You also, during the .com, you're also in the US?
I was also in the US.
Ah,
yes.
all right.
And back then, you could be fired on the phone. You could be laid off on the phone. So in one of the lowest times, everyone in the office got a letter. Some people are told to stay in the office.
Yeah.
Some people are told to go for breakfast in a hotel there next to the office.
Yeah.
Those people in the hotel were told, you're all staying.
Oh.
And the people, yes, I know.
I was expecting that. I was like, it is a final breakfast, like the final supper. So the breakfast
was you're all staying, but you need to be out of the way for all the people who are packing up and all the emotions.
All right.
And there were, there was police that was put in all the lifts just to make sure that everyone leaves.
Police?
Police, yes. There was a thing, I don't know if you ever heard of, called going postal in the US.
No.
So someone was laid off, a postal officer, went home, got ammunition and guns and came back. Yeah, and so from that point on, now
they took precaution.
Yes. So now layoffs thereafter had to have.
Also, that's why there was separating guys who were staying to go to the hotel.
Yes, to the hotel to have breakfast, and then everyone who was staying was to then quickly leave. You're not even allowed to do too much. You just grab your bag, you're told what is happening, and then you leave, and you're escorted right out. So that was it. I forgot the question you asked.
No, the question was about in terms of the lessons that you
learned
during those
so
particular two
recessions. From an individual perspective. And so in that environment, the big question is, how do you survive? How do you survive employed? How do you survive in that economy?
Yes.
And one of the things that we learned is you have to work to the extent that other people talk about you when you're not in the room.
Yes.
And if you can build that experience, you'll survive. The people who don't survive are the not my job type people, I just do this, I don't ask questions, I try to hoard all the knowledge. Those people don't survive. But if you're able to work to the extent that you build relationships, people talk about you positively when you're not in the room, you'll survive any situation. From that point on, we came here, we had the post-election violence, and it's the same discussion. I know you asked me how I was able to, off camera, how I was able to achieve the positions. And it's the same story. Can people talk about you positively when you're not in the room?
All right.
And you'll be able to make it. Yes.
Interesting. So when you came to Kenya, you started off also, you progressed your journey. I wouldn't say you started because you're already doing it in the US.
Yes.
So, and you mentioned, some of the things that you got into in terms of SMSing. But let me, before even getting to that particular journey, debunk for me, what's the difference between an investment banker and a normal bank? Let's just start from the basics.
First, I take offense to the word normal bank.
Or a commercial bank. Or the bank as we know it.
Exactly, yes. So there is investment banking, and then there is commercial banking. And these are two siblings fighting for your shilling. Right? And so in commercial banking, what happens if I have a little bit of money, I will go and I'll give it to the bank. The bank will take my money and loan it to somebody else. So in fact, give it to somebody else at a high interest rate. They'll keep most of that money, and then they'll give you something small for your trouble of keeping your money. The big thing there is I do not know who ended up with my money on the other side. With investment banking, once again, I have a little bit of money, and then I have a corporate who also needs money. Safaricom, KASIB, all the listed companies. And an investment bank arranges for me to give them my money. I keep most of the money that institution will pay for my money, right? A few transaction fees for the investment bank. And so the big item there is, in investment banking, I know who took my money, right? And that's the big difference between these two. And one of the things that we always have to keep in mind is, if I'm putting my money in a commercial bank, I want to reduce my risk as much as possible.
True.
That's why it's a savings account, there is KDIC, it's insured and the rest. When I'm in investment banking, I'm looking for the highest return possible with a reasonable risk. And so that plays to the two people. And what is important is a country cannot grow substantially without these two arms being separate and equal. All right? And that's one of the things that we are really pushing as the association, is that these are separate and equal. Currently, of course, the commercial banking industry has a huge gap, right? They started before independence, so they are way ahead of us. We are still a young industry, but we are making strides as well, of course, with the ups and downs. But that's the general idea. If you are to look at even colonialism, that was investment banking funded. All of these things where there is a lot of risk, entrepreneurs coming out, I need to do something, you can't go to commercial banking. You have to go to investment banking or merchant banking, as it was called originally.
Interesting. So just break down to me in terms of, what's it called, as you've mentioned, they're two distinguished, but they are, what's it called, have to work together in a particular economy.
Yes.
In terms of the investment bank, let's say, where does one start? What's it called, for any person watching this and primarily is trying to look in order of investment, where does one start? What's the process for one to actually to be able to probably put in their money in an investment bank? What does one look at in terms of returns? How does it work literally in a nutshell?
Yes, that's an excellent question. So let's create the correct narrative. So the first piece of that narrative is understanding commercial versus investment.
Yes.
The second piece of that narrative is to understand the underlying context. So as I said, I have made a little bit of money, and the way I make this money is I have some sort of skill that society will pay me for. Once I have that, I then tend to want to get a return out of it, primarily because of inflation. And what you find a lot of people doing is they start doing side hustles type things. Now the problem with that is that 90% of businesses fail. That's not a Kenya problem. That's a global problem. It's just the nature of business. Business is risk. And so a lot of these people who have a little bit of money, instead of going to start side hustles, they should look to people who are experienced in running businesses, right? And that's what the exchange does primarily, right? You get people who have started companies, have grown them substantially. In fact, there's a term that we use called de-risking, right? The more the company grows, the more they de-risk the business. The first de-risking is called post-profit. Then there is, you get your first customer. That's a business that is de-risked. Profit, that's a business that is de-risked. Growth, that is a business that is even more de-risked. At some point, you're de-risked enough to list on an exchange where you and I can now participate. And so we're supposed to give our money to these people who know what to do with it, right? And they reward us back with dividends, they reward us back with capital gains. Right? So when we take that framework, then now we say, all right, how do I choose what to buy or what to sell? Now, there are ways that you can look at it, and there's two worlds. There is a world of what are called financial analysis. And in financial analysis, I look at the company, what it's doing, what the CEO is articulating, where it's moving. And then I move up into the economy, and what is the economy doing in support of this company. And then the last piece is I look at the price on the stock market. Right? Now, for fundamental analysis, you require to have certification in that if you're going to do this thing well. Right? One of the more globally known certifications is the Certified Financial Analyst, the CFA, and the 3 levels of it. And if you're going to do this, that's the way to do this. Now, let's be clear. if you're going to be a CFA, some of the rumors out there is to get a CFA 3, you leave your soul behind. That's how much you have to work. And so if a CFA walks in front of you, the appropriate action is to bow first and then speak to them. On a light note. But they are absolutely distinguished at fundamental analysis.
Interesting.
The second more aggressive way of doing it is called technical analysis, in which I am studying the price movement in the market, and I am putting emotion into it, not my emotion, mine has to be absolutely cut off. But what do other investors do in a particular situation? And with that, I make more aggressive movements in the market, but they're shorter term based. Now, the pinnacle of that is what Forefront does, which is called algorithmic trading.
All right, what's that?
Now, in algorithmic trading, we're taking technical analysis and we are powering it with algorithms.
So technical analysis is terms of looking at it in terms of, is it the price,
the price movement in the market.
So that's in terms of the stock price?
The stock price, my apologies. So in the market, every day someone is buying and somebody is selling.
True.
Right? And they're offering bids and offers.
That's with regards to shares.
With regards to shares in the market. So let's take a step back from that. That's a brilliant question. It allows me to step back. So I have a little bit of money. I've given it to, you spoke about Michael Joseph.
Yes.
By the way, I think that's going to be a brilliant talk. I had the privilege of being in a talk with him. Life-changing work. Now, once I give this accomplished CEO my money, I may want it back for whatever reason. In order for me to get my money back, I have to sell my shares in the market. And so I have to go to the market and find out what are people buying and selling these shares for. Right? Now, that happens with, just like we're buying tomatoes or onions or the rest, there's someone who gives you a sell price and you have a buy price. And when they match, the system automatically matches. So in technical analysis, what I'm looking at is trying to figure out what the other guy, what my counterparty wants to do, right? And trying to figure out, if I buy at this price, does that create some sort of euphoria? Does that create some sort of depression? And this is what's going to happen to the price. Now, you can take that and put an algorithm behind it, right? And in our case, the algorithm looks at 6 years of data to make one decision, whether I'm going to buy or I'm going to sell today. And so we are seeing technical analysis at a speed that has never been seen in the country before.
Interesting. So primarily your system can access the movement of that particular share price over a long period of time and be able to make decisions out of it.
Excellent. So it looks at end of day data and we give it the last 6 years of data. And so through the last 6 years of data, it tries to predict the next 2 weeks of movement, because I have to buy and I have to sell. Or
and
another.
What's the probability of success?
Excellent. So far we have seen 70% success. So technically we can close our eyes, go home, and we'll just keep generating cash. It's never 100%. Anyone who tells you an algo is 100%, you look at them sideways with the evil eye. Algos fluctuate, and in fact our current state is we now look and see, does the 70% continue? Since we released it now onto live market trading about a year ago, and so it's been doing 80% since then, but we can allow it to fluctuate.
All right, so let me try also just to break it down for the audience, because I know some are not as technical in terms of matters finance as probably we may be, or as distinguished as you are, because I can't claim to be. I can't claim to be as distinguished. So to that particular normal person, as you mentioned earlier on, they look at an investment banker as an option of risk. What's it called? As a lesser risk.
Reward.
Risk versus reward. So I have my, let's say 100,000. I can give it to an investment banker. So for you, you try to invest it in what's it called? Listed markets, and then try to give them a return.
Exactly.
So how does it work? What's it called? When can one expect this particular return? What is usually the average return of this particular amount of money, and why should one do this?
Okay, excellent. So stock markets generally give 10 to 11% return. So they'll play around there. Even when you find, not even just Kenya, even internationally, you'll be somewhere around 9 to 12% return. What one number that should guide all investors is called the risk-free rate. The risk-free rate is when you give your money to government. And that's what's called a 91-day treasury bill. And that rate is a rate that sets everything at par. And we compare everything to that. I forget the last one, but it is set every week through an auction every week. Now, when I give my money to an investment bank or a stockbroker, it's not like giving my money to, or putting my money in a fixed deposit. A high-quality stockbroker should make me aware of what is happening with my money. We are buying Safaricom because of. We are selling KCB because of. Right? And so I need to always be very clear about what's happening with my money. This is very different from commercial banking, which is, here's my money.
You whatever.
Let me know after 3 months. And so what I then get is the ability to make money when it's good or take the risk when things don't work out as good. And we should be very clear. That's the thing. Now, one of the things I always like to tell investors is you need to look for risk. Right? You need to be responsible about it, but you need to look for risk. If you can tell me someone who has made it in this world without risk, I would like to find that person.
Same here.
So that's what this world is all about. You have to look for risk, but responsibly to your state in life. If I'm a young person, I need to be able to accelerate that risk. If I had a lump sum of cash, maybe from inheritance or from some sort of insurance claim, I need perhaps to be more conservative with my risk, but I need to look for risk. It's a fundamental part of succeeding in life. Now, what a good advisor will do is help you understand, first of all, what's my risk appetite. And all stockbrokers are required to profile a customer. And they're required to provide investments that are appropriate
to that customer.
Right? And so if you go to some sort of advisor who's not starting you off with who are you, tell me about yourself, you know, start questioning. But if you go to any of our members, that's where we start off. Right? And the current age group of investors in the stock market today is 45 plus.
So it's the
and they are quite knowledgeable. So it happens less and less because they already know themselves. They already understand. But if you're a new person, I absolutely advise go sit with one of our members, and you'll be able to really get an understanding.
Maybe we'll just take a small break because you have to go on a short commercial break, but we'll be back. We'll just discuss the forefront and also discuss all these particular aspects around investment and where do you need to actually to start off. So see you after the break. So welcome back to the show. Before we went on a break, Donald was just taking us through this particular journey on how exactly you need to go about investment. He broke down to us what exactly is an investment bank and a commercial bank. What's the difference? What exactly does an investment bank do? And I hope you're getting nuggets out of this because it's very, very key for us to understand investment because you can't live in poverty forever. we have to move ahead. You have to move ahead. Yes. And I think before you went on a break, you wanted just also to you were mentioning to us in terms of what's it called, the intricacies that an investment banker does. And also you're telling us in terms of what Forefront Management is actually doing around this. Maybe you can just break to us further. If a client comes to Forefront Management, what exactly do you do for them with regards to the investment?
Yes, excellent. So allow me to just put a bit more clarity.
Yes.
Investment banking and stock.
Yes.
So investment banking are the people who arrange how your money will go to the corporate, KCB, Safari, all these listed people. That's what the investment bank does. The stockbroker comes to play when you need to trade your shares.
So they're two distinct individuals.
They're two distinct individuals.
And entities, yes.
Exactly. And an investment banking license is encompassing. It does everything. A stockbroker's license doesn't do investment banking.
All right.
But so that's why we can use the word interchangeably when you're doing stock brokerage activity, buying and selling of shares and the rest, and financial advisory and that. You can go both to a stockbroker and
to an investment banker.
So now let's bring in what Forefront does. So the world in general came across a problem, which is how do you offer high quality advisory services to smaller value portfolios, right? And a
smaller value, where do you classify it?
A smaller value.
Yes, yes.
Well, that is something that we actually had to debate quite a bit. Investment banking and, or let's call it portfolio management, has typically been a high net worth activity, a million plus.
Yes.
Right? And if you have 1 million shillings, you're going to get absolutely wonderful service, hands down, from 17 different people.
Yeah.
Right? Once it starts going down to 200,000, 100,000, 50,000, it starts getting a challenge. Now, is it because people do not want to talk to you? Actually, no. It's an economic problem. A financial advisor is paid through a performance fee on your portfolio, right? So let's call it a 2% annual fee on your portfolio.
Yeah.
Now, 2% of 50,000 isn't as much money as 2% of a million shillings.
Yeah.
And so quality starts being separated. All of these advisors would want to work with everybody.
Yeah.
It's just that the portfolio size,
it's small,
can't afford it. And from a conscience perspective, this high quality person doesn't want to charge you 7-8% on your portfolio to get his services, right? The fees just don't make sense.
Yeah.
So how did the world solve this problem? They created a category called robo advisory. Right?
What does robo mean?
Robo, excellent. So now you can start conjuring in your mind AI, algorithms, all of these digital services. So they took high quality service and codified it into a system. So the system is able to profile you. The system is able to help you navigate your goals in life. The system is able to do portfolio management through the algorithms and automatic portfolio management. Right? And so once that new category came about, Forefront became the first licensed provider in Kenya for that service.
Interesting.
So now we're able to give you the same high quality services as any high net worth individual at your size of portfolio.
What's the minimum? What's the minimum that one can actually start this journey with?
Our current minimum is 50,000.
All right. So how does it work? Do you have a website? The one goes, or you have to come physically? What does it work for any person? Let's say I have 50,000 and I want to be, what's it called? I want to invest my money with Forefront Management. Where does that particular journey start?
The journey starts on our website. And so we have a very interesting licensing. Where the technology is the advisor, right? And so all the staff are there to support you in terms of if you're not comfortable with technology or you have any questions or if you just feel like I want to have a human face behind it, you'll have associate help work with you, but the core weightlifter is the technology in terms of what it's going to do. For your portfolio. So
when I put in this 50,000, because for Kenyans you like things very simple. Nikeka pesa hapa ndapata ngapi in return.
Exactly. So we agreed that if you go to investment banking or the stock brokerage field, someone who then gives you an answer to that is starting to drive you down the wrong path. You need to know exactly what are you going to do with my money. Remember the difference between investment and commercial bank?
Yes.
I know where it's going.
Yes.
So I need to know what are we doing, right, with this money. If you tell me that we're going to buy a T-bill, why? What's a T-bill, first of all? Why? How are we calculating? If it comes to why are we buying whatever, Equity Bank shares, why? Why now, right? That's where you need to be as an investor, right? The person who takes his money and puts it in a fixed deposit and comes back after 3 months to get their return, that's not an investor, right? That's a saver. Right? And saving is fine. Saving will get you to the 50,000 that Forefront needs to get you. But that's not an investor. An investor, as we said, is a person who's understanding what is happening with their money.
Interesting.
They cannot put that away.
So primarily if I put this 50,000, it's up to you to do that particular investment, but you inform the investor that you're actually doing ABCD.
Exactly. So there's a curriculum behind it. As we mentioned, it starts you off as basic as what's the difference between investment and commercial banking, takes you all the way to advanced strategies like short selling, which Forefront is the only one.
What's short
doing.
selling?
Excellent. So short selling is when you make money when prices are falling, right? And how it works is let's assume I have the view
Yeah.
that Safaricom price will fall, not that it's going to fall.
Yeah.
Let's be clear.
It's e.g. It's an example.
Exactly.
Uh-huh.
So let's assume Safaricom will fall. On your side, let's assume you inherited Safaricom shares and they have sentimental value. You'll never get rid of them. What I do is I tell you, all right, let me borrow your shares. I'm going to borrow at whatever price they're at, let's say 15 shillings. Yeah? And I think they'll go down to 13. I borrow at 15 shillings, I sell in the market. I wait till they fall to 13, buy them back, give you back your shares, right? I just made 2 shillings. Right? This strategy is so powerful that had Forefront been doing this earlier, the last 2 years would have been just absolutely astounding in the terms of the amount of money that would have been made in this market. The idea
So you literally anticipate stock prices falling and then buy them when they're low and then you resell them once they're back.
That's long. That's going long. So now we have now the vocabulary of I'm either going long or I'm going short.
Yeah.
Going long is the usual. Price is low, I buy, I wait, I sell when it's high. Going short is borrow and sell, wait for it to come down, buy and return. So now you can imagine a market where if the price is rising, I'm making money. If the price is falling,
I'm making money.
Exactly.
So it's called short selling.
That's
I'm also
called
learning
short
all
selling.
this.
Yes.
Something also you've mentioned as an aspect whereby, what's it called? As an investment banker you're in, that's matters of treasury bills and treasury bonds.
Exactly.
And I know most guys, for me when I talk to guys, most guys don't know the difference. Let's break down to us. What's a treasury bill? What's a treasury bond?
Brilliant. We said we're gonna just keep it simple.
Yeah, we're just keeping it simple. Yeah, I think we presume everybody's as technical, but as you mentioned, most of the investors are 45 plus, and a significant part of the audience probably are less than that or within that particular point and don't have an understanding of what exactly it is.
Yeah, and in fact, an interesting statistic I came across is that 75% of Kenya is under 35. That is the powerhouse of our country.
True.
Those are the people we need to bring into the stock market. So now, treasury bill and treasury bond, there's only one difference, time. Yeah. If it is under a year, it's a bill.
Yes.
If it's over a year,
it's a bond.
It's a bond. Everything else is pretty much the same. I mean, there are a couple of technicalities, but we said let's get out of the technicalities. So anything that the government is issuing that is under a year, and there are basically 3 categories: 90 days, 6 months, or a year. Right? Those are called bills.
Bills, yes.
Anything over a year, and they can go as far as 10, 15, 20 years, those are bonds. In very simple terms. Yes.
All right, interesting. Yes. And then someone also will want to ask, because you know in Kenya, one of the biggest narratives is that when you get money, the biggest investment you can do is in real estate. Wekelea pesa kwa shamba. I think Kikuyu they say mogunda. I don't know.
We shall forgive the accent.
We shall forgive the accent, but you get what I'm saying. And there's this obsession about real estate as compared to what's it called, the investment banking front. Maybe just in your particular view, debunk this and primarily maybe someone see a light to this other particular aspect of investment beyond real estate.
Okay. So let's talk about real estate and even the other options. So when we get into real estate, what we see, and rightfully so, is that there is always a continuous rise in the value of your money. Yeah. And that is something that someone should keep in mind. Absolutely.
Yes.
Let's understand what you don't get. Yeah. Let's assume I own land. And let's assume I need money. How far am I from the money?
Very, very far.
Yeah, we are like a year away from the money. Yeah. So that's called liquidity. Yeah, it's a very illiquid asset. And even worse, what if I needed just a tenth of that money, not the entire thing? Do I have to now sell my entire piece of land so that I can get access to a tenth of it? Yeah. So that illiquidity problem is an issue. In fact, it goes to the extent where you get what's called dead capital. Now, dead capital is where I come from upcountry. I do a few good things in town. I have a little bit of money, and then I go and I build some sort of mansion.
Yeah, Simba. They call it.
Now, that idea just absolutely kills your capital. Right? Yes, it is there and it is going to grow, but you have no access to it. Right? So you end up being quite liquid. Yeah, you need to go to hospital. In India,
you have to sell your shamba. It takes how long to sell it?
Exactly. So, and if it's an emergency, you're out of luck. So now let's bring in the stock market. Now, the stock market, for those who are patient, you're not playing around, you're not doing anything that is dramatic, you should be able to make about 10% return consistently. What people will, especially young people now, their main experience has been a downward market. I think we've had a downward market somewhere around 8 years. So that's the main experience. But the question I like to ask people is, when you buy something, when you're buying an asset, do you want to buy it when it's expensive or when it is cheap?
When it's cheap.
When it's cheap. So I never get this understanding of, oh, the stock market prices are falling, therefore let me not buy. It just has never made sense to me, right? And so for a lot of the high net worth, what you'll find is that they are very quietly always buying.
When it's falling.
Well, it's falling. I think Balubai was in the media. But Balubai is a huge billionaire in Kenya, and he was in the media maybe I want to say about a month ago. I think he bought $1.2 million worth of Cooperative Bank, right? And people are saying it's falling. And so this is what tells you got to get past this narrative. I
think you need to cross to become the billionaire mind.
You have to remember the stock market has been there since before independence. It is going to be there after you are not here. So this idea that things are falling, it's just wasted opportunity over wasted opportunity over wasted opportunity. Now, for the more aggressive people such as yourself, you can short sell.
True.
You can write it down making money and then go back up again.
Interesting.
If you're less aggressive, you are maybe in your late 50s, or maybe you, as I said, you got some money through a lump sum, insurance or something like this, then just buy slowly, keep accumulating, right? And you'll make very good living. I mean, I have seen absolute millionaires made in the stock market. Myself, people who walked in, they were not millionaires.
Now
and by the time they were done 10 years later, they're absolute millionaires. And it wasn't any business or
stock market.
Absolutely.
And that's how you've made your wealth.
That's how they have made their wealth. Let's
Something else also I want to shift the conversation a bit, is that it matters around governance. I know you sit on so many different particular boards, and also a key audience that you actually watch the show, also entrepreneurs, and governance, such an important aspect. Also, as you mentioned, aspect of de-risking and businesses that you invest in have de-risk, and governance is part of it. How important is governance? And for any entrepreneur watching this, at what point should one set up their governance structure?
Yes, that's an excellent question. So we start with the person. I like always grounding it in the person, this entrepreneur. How big is this dream? Right? There are people who make or start businesses for lifestyle. Right? I need something to do. I can't get a job. This is the thing that I can do. Let's just say that dream is sufficient for the work that it will do. And it's a big portion. That's why businesses do not survive the founder. But if you have a big dream, if you can actually picture, and we find it to be a challenge actually, someone who wants to really allows themselves to dream big. Now, that's the person who starts putting the right structures in place. The reason you need these structures is because at some point, you're going to want somebody else to put money into your business. And the first thing that person is going to say is, let me see your corporate structure, let me see your board meeting minutes, right? Let me understand how often the auditor comes in, have you changed the auditor as per regulation? These questions now start coming in. And that person is trying to judge how de-risked is this business. Yes, exactly. So once I understand the risk level, then I can anticipate the reward level, right? I can't anticipate reward without understanding the risk. Right? And so the person who is actually dreaming that big, and unfortunately, I think it is something we have to be trained. We don't all come out that way. I think in a lot of us, even how we were brought up, the conversations we had in the home were let us survive type of conversations. Few homes have let us dream conversations, and these let us dream conversations are the ones that really money is looking for, and there's a lot of money looking for them. They will undergo everything they need to undergo and put everything that they need to put in place to be able to do it. So currently, when you talk to venture capitalists
Yeah.
and PE firms, they spend about a year just trying to figure out the risk of a business. Yeah, it's called the due diligence
Yes.
phase, and they're trying to put all these things in place. Now, if you're a company that already had that dream and started putting these things in place, they're going to be scrambling, trying to get you. They will be competing to give you money. But you have to be that.
Yeah, to have. All right, interesting. And there's something also, I think when before we started the show, we were just discussing, what's it called? I was mentioning to you, I'm a part of a board member of a particular school.
Yes.
And you're telling me in terms of how we need to literally just get into the NSE and probably just to list. And there's always this narrative, or rather from my understanding, it's always that it takes so much for one to be listed. Maybe just break down to me, because you're a board member of the Nairobi Security Exchange. What does it take for a business to be listed in the NSE?
So first, I need to have a disclaimer. I'm a board member, and the chair
Yes.
has the role of speaking for the exchange. So that needs to go out there. Somebody is going to give you their money, their hard-earned money. They are going to want to understand what is happening with your business. And so there's this ecosystem that has been put in place for you to be able to do that. Right? Part of this ecosystem is the regulator, Capital Markets Authority, is the investment bank that has to do its due diligence and the paperwork that they have to produce. Now, if you're a business that did not think about this, in a relative short term, you just decided, you woke up today and said, you know what, I want to list, there's going to be a lot of work to put together, So you can think of every time we have an IPO, an initial public offering, which is when you initially send out your shares, there's this thing that is set up called a data room. And the data room, you can imagine a store with every piece of paperwork that everyone can find to be able to deliver understanding of your company. That, I think, is a very fair thing when someone is going to give you their money. If you're someone who had this dream and already put these things in place, the turnaround can be quite fast.
Faster.
Yeah, absolutely fast. What should be well understood at this point? The Capital Markets Authority is looking for you. And it has the entire backing of government in doing that. An entrepreneur who has such a company should feel as if they're just the belle of the ball. Everyone wants them. And the best part, when you go to get a gold loan, you take the terms of the loan that are given to you. When you're issuing, you're the one who dictates the terms. I will pay back in this much. This is you're the one who everyone is looking for. And that's the narrative that should go on. I think every CFO out there should have really strong conversations, should be calling investment banks and the exchange every day. Everybody wants to listen to you. That's the best way I can put it. So it should be commensurate to how well you've built the business. When you spoke about your school and the work that you've done there, I think it would be a wonderful story.
I think it's time, as we mentioned, we did need to dream. I told you 40 minutes usually flies so fast. Imagine they're just indicating to me like time is almost done. But maybe just in a brief, to any person watching this, what's the final tip you can give them with regards to investment? Probably in a minute.
What's the final tip to give them about
to
investment?
Especially anybody who's aspiring to invest?
First thing is to know that investment is a change in who you are. If you're investing and you're doing it well, and you've been doing it for 10 years, you should be a different person. Investing isn't give somebody my money and then let's see what happens. That's not investing. Investing successfully is a change of the person. Is understanding exactly what is happening into my money and being in partnership with my money manager. If I put that in mind, I will always be successful 100% of the time, regardless of the circumstance of the economy.
Wow. Interesting. I think quite an interesting way to end this particular conversation. And I think we need to repeat this. We need to have more of this particular conversation. So I'll have Mr. Donald back again, because I think we've learned so much around investment. You've learned so much around what exactly it takes for you to invest. I've learned about this, what's it called, an investment banker. What do they do? What do they invest in? Personally, I myself have taken a lot of notes, and I'm just looking forward to actually implementing them. Hope also you have actually done that. You can also access Forefront Management. You can access, what's the website?
Exactly. FOUR. front.mgt.ke.
Interesting.
Yes.
So you can actually
number 4 front mgt.ke.
Wow. Interesting. So you can check it out. For as minimum as 50,000, you can start your investment journey. And what a way to actually get to start this journey. As always, reminding you for the masterclass happening, 4th of April. I'm looking forward to having all of you. We have limited seats available. We like to share all these particular conversations with you so that you can also get to understand about business. We'll be having Michael Joseph at the Nairobi Cinema on 4th of April this year. And also finally, we're also here at the Capital Club. So I always invite you as an entrepreneur and you want to be part of a network, because you always say your network is your net worth. So join the Capital Club, because being part of it, not only do you have access to amenities, but you have access to very high net worth individuals. As always, thanks so much for having watched the show. Hope you've learned a thing or two. I'll see you next time right here on the Late Night Business. See you then.